Well, I do think that they will eventually do stimulus, but the problem is right now, if a lot of the economy shut down, it's very difficult for them to rely on their traditional stimulus tools. So they have done some things like waive social security payments. They're providing direct transfers to firms that are struggling, and that will help at the margin. But there's little that they can do to push consumers to consume again, to force companies to return to work. You know, they've been trying to encourage local governments to push companies to return to work, but local officials are in a very difficult position because, at the one hand, they're being told to get things started again, but also to contain the virus, and those two goals are coming into direct contradiction.
Yeah, there's a trade-off, isn't there? Are you changing your projections for the economic outlook based on this trade data? Because on the one hand, imports were actually slightly better than expected, but the exports had that huge drop. And the question everyone has is what happens on the quarter in terms of growth?
Yeah, so I mean, we've already slashed our growth forecasts. We now think the economy will contract in year-on-year terms in Q1. I don't think we're going to be changing that as a result of the import data, partly because I think the continued resilience of imports simply reflects the fact that the hit to domestic demand hasn't fully fed through into new import orders. There's a lot of stockpiling going on. Factories have imported these goods, but they're not actually able to step up production. And so I think the worst is still to come, particularly given that the data we had is a combined figure for January and February.
Sure.
And most of the disruptions fell in February. So the March numbers are probably going to be even worse.
So what's feeding what here in terms of, are the traders saying, okay, perhaps China isn't coming back online as soon as we had hoped, perhaps the growth outlook there could be even worse than we expect?
Yeah, I think a lot of people were expecting a fairly sharp, quick V-shaped recovery, that by now, the economy would have returned to normal pretty much. I think that's looking less and less likely. I mean, we just had some figures published over the weekend by the Human Resources Committee in China, which suggests that some migrant workers might not return to their workplaces until the end of April. So this is going to be a very drawn-out process, and as a result of that, I think people are pushing back their expectations for stimulus. I do think it will happen eventually, but it's now looking like it's going to be focused perhaps in the second half of the year rather than in Q2 as some people had hoped.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.